Have you ever taken a trade that looked perfect technically, everything aligned, clean setup, and then the market just completely goes against you? Yeah, that's because price doesn't move randomly. Market moves because of macro data, sentiment, and capital flow. And that's exactly what StarEdge is built for. So in this video, I'm going to walk you through the entire platform setup, step by step, and more importantly, show you how to actually think when using it, not just what each page does. Let's get into it. Alright, so first thing you see when you open up StarEdge is the top setups page. This is where everything starts. Now here's the key idea. Instead of trying to analyze 20 different things manually, StarEdge already combines all the indicators into one score. And that score ranges from +5 upwards is bullish, 4 to -4 is neutral, then -5 downwards is bearish. So basically, you're getting a weighted bias. Now the question is, how is this score actually calculated? It's not random. It's built from macro data like GDP, commitment of traders, retail options and positioning, trend and strengths, and overall risk environment. So when you see a +4 or +5, that means multiple things aligned in that direction. And this is where most people mess up. You don't want to trade everything. You want to focus on bullish pairs and bearish pairs. You can use this filter to filter out the neutral pairs. Also, you can filter out the type of asset you want to use. For example, if you include everything here, you can filter out minor pairs, metals, major pairs, indices, energy, currencies, and even crypto. The second page we go to is the risk on or risk off. Now, once you identify the setup, the next step is understanding what kind of market we are in. This is where risk on and risk off comes in. Risk on is basically investors are confident they are taking risks. So you'll usually see stocks going up, Bitcoin going up, currencies like Australian dollar and New Zealand dollar performing. Risk off is the opposite. Fear in the market, capital moving to safety. So you will see gold rising, the dollar or Japanese yen strengthening, and stocks falling. In StarEdge, we use the Bitcoin to gold ratio. Now, this part is very powerful, and this is basically a pure measure of risk appetite. If Bitcoin is outperforming gold, that means risk is on. If gold is outperforming Bitcoin, that means risk is off. This matters because now you are not guessing sentiment, you're actually seeing where money is flowing. And this helps you confirm, does my trade idea match the market environment? Next, we go to the economic heat map. This is where StarEdge tracks all economic data releases. But the most important concept in trading is market moves on expectation, not just the number itself. So let's say, for example, the PPI year over year that was released on March 18, the forecast was 2.9%, but what was released was 3.4%. That was a surprise of 0.5%. Even if the 3.4% doesn't look huge, it's better than expected. That's a bullish reaction for the dollar. So what StarEdge does, StarEdge automatically tracks releases, compares actual versus forecast, and assigns a bias. So instead of manually checking calendars, you instantly know bullish or bearish impact. Now at the bottom, you see something very important. Each currency has a final score. For example, the US dollar at the moment, we are having a 72% score, which is very, very bullish for the dollar. Let's look at the euro. We can see that the euro at the moment has a 14.3% score, which is very, very bearish for the euro. This is where things get simple. You don't need to overthink pairs anymore. If USD is strong and the euro is weak, Euro USD becomes a sell. That's it. After all this, we can go to the eco surprise meter where we find all the currency pairs. Now this page right here is extremely important. The currency strength gauges are here. Trading is not about buying randomly, it's about relative strength. You want to pair strong currencies with weak currencies. Example, you can pair the strong US dollar, which has a 72% score, with a weak euro, which has a 14.3% score. And that becomes a sell, the euro USD, because the dollar was strong and the euro was very, very weak. This alone can completely change your trading because now you're not posting setups, you are aligning with actual capital flow. Now we move into sentiment. This is where we track positioning, the latest institutional activity. This gives you the recent institutional activity. Think of this as the short term positioning. Here we track the recent activity from the institutions. We can see there's the net percentage change column. Here we track the most bullish changes. We can see from the recent filing, assets like silver, S&P 500 and GBP had a very bullish filing, while assets like the Nikkei, Nasdaq and the Dow had a very bearish filing from the institutions. Next, we can move to the net institutional positioning, where we see this shows where institutions are positioned overall. This gives you a long-term bias, recommended for long-term traders. The next page is for the retail positioning. Now this is interesting. Retail traders are usually on the wrong side. So when retail are heavily buying, we can actually be bearish and vice versa. We use this as a contrarian signal. Next, we have the COT history page. This shows positioning over time. You are looking for extremes, shifts, and reversal. This helps you understand, is the trend crowded or still developing. Next, we have the put call ratio. This is still under development. This tracks option sentiment. High put volume means that there is fear in the market, while high call volume means that there is greed in the market. This is especially useful for indices and overall risk sentiment. Next is the seasonality. This shows the average market performance for the last 10 years. It's divided into monthly and annually. For monthly, we can see, for example, the pair NZD-USD. For the month of April, the pair is very bullish. We also have the annual tracking, where we can see for all these pairs. Note, it's not a signal, it's a probability layer. If everything else if everything else is bullish and seasonality also supports it, that strengthens your idea. The economic growth data. Now we go into macro. This includes GDP, services PMIs, manufacturing PMIs, and retail sales. For example, looking at the US dollar, we can see the trend for its GDP growth. From July last year to January, the growth from the US was very strong. But for the last 2 months, we can see that the market didn't reach the expectation for the month of February and March, which previously it was breaking its expectations. The same applies to manufacturing PMIs and even retail sales. This tells you one thing, is the economy growing or slowing? And again, it's all about expectation versus actual. Next is labor, where we look at NFP, ADP, unemployment rates, job openings, and wage growth. Here we track if the market has been beating expectations from the releases. For example, April 3rd, which was yesterday, we can see that NFP for April beat expectations by a lot. We had a forecast for 60 and we ended up getting 178, which is a very big margin. Where this matters, labor drives spending, inflation, central bank decision. Strong labor is equals to a strong economy, while weak labor shows slowdown in the economy. Here, next, we have the inflation pages, where you have CPI, PPI, and PCE. Inflation affects interest rates, yields currency strength. For example, high inflation means that we'll have higher rates, and higher rates equals to a stronger currency. Now, interest rates. This is one of the biggest driver in the market. Let's start by looking at real yields. We can use the US dollars as an example. If yields are moving higher, that is very bullish for the dollar, and that is very bearish for gold. So this selection helps you to confirm the macro direction. Finally, we have the interest rates page. This ties everything together. This is where you confirm which currency has the strongest policy backing. So at the end of the day, StarEdge helps you answer three things. What's happening in the economy? How are the traders positioned? And where is money flowing? When those aligns, that's where the best trades are. And the difference, most traders look up charts, but with StarEdge, you understand where the market is moving. So at the end of the day, StarEdge helps you to stop guessing and start trading with actual context. You are no longer looking at charts, you're understanding what's driving the market, how the money is positioned, and where capital is flowing. And when all things are aligned, that's where the real edge is. If you want to try out for yourself, just visit Trading page or just click the link in the description and get access to StarEdge for a free trial. I'll see you again in the next one.